The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone. We are going to be starting in just a couple of minutes, so I thought I would do a quick sound check, make sure everybody can hear me okay. So if you could let me know and where you're tuning in from, that would be awesome. Really appreciate that. We have Dawn from San Diego. And let's see, we have John back from Kingston here. Oh boy, they're coming in fast now. We have Pennsylvania. We have Kamoka, Ontario. Sandy, welcome. Renee from Saskatoon. Paul from partly sunny Burlington. It's a beautiful day here in Lethbridge, Alberta. So looking forward to getting out this afternoon. Maybe a few more rounds of golf. And when I say golf, I mean frisbee golf. Haven't been out on the real course very much this summer, unfortunately. Glenn from Medicine Hat, great to have you. Just a little bit to the east of us here in Lethbridge. And Mitchell from Kansas City, Tom from Burlington, Peter, Burlington, great to have you with us. David and Ian from Portugal, Dawn from Kelowna, and we have Antonio from Montreal and Tom from Phoenix and Mary from Warner Robins, Georgia. Great to have you with us. Michelle in sunny Montreal, Réjean from Montreal, Larry from South Carolina. Wonderful to have you all. I'm so glad you're all here, and I do hope everyone is staying healthy with what's going on with the pandemic, not only in North America but around the world. It's just a worrisome time, and we certainly hope everybody is doing well. And in terms of the markets, we felt it was really important to give you a very strong update again today on the markets and where we think things might be going, at least short term. It's a little hard to look too far out. But we're very delighted we'll have Dr. David Paul with us again, our friend from the UK, Managing Director. And of course, we have our keynote speaker, Don Wellwood, who is tuning in from Rio Dulce, Guatemala, beautiful Rio Dulce. But his sound is his audio is good, or his sound is good. He's having a bit of audio, so he's going to try that again, and we'll catch up with him in time for his presentation. Really looking forward to that. He's done some amazing work with his Coburg, Ontario user group on their model portfolios with great results, and looking forward to learning about that. Diane with us from Brossard, Quebec, and Peter from Florida. And we have Rob from Oxfordshire in the UK, Jake from Toronto, Christian from Denmark. We have Stephen from New Orleans. Looks like everybody can hear me okay, so I think we'll just get started. And again, my name is Stan Heller. I'm the person in the front row here, and it's my lovely family, which I think is the reason why a lot of us invest for the financial security of our families, and that's why what we do is so important, and using the VectorVest program is so important. If you have trouble getting into the webinar room, I guess you've made it so far. but if you want to watch the recording immediately after the event, this is the YouTube channel where we are rebroadcasting, and we've got a lot of folks. I can see just looking at the YouTube channel that we've got a lot of folks on YouTube, and lots of people coming in there, so looking forward to that. All right, let's see if everything advances for me here. I want to make sure we're doing okay. Let's just make sure. So there might be a little bit of a lag depending on how fast your computer is and your audio. And if you lose audio or sound, you will need to log off and log back in. There's no other way to fix it. Close most of your open tabs. That would be the way to do it. Enter your questions in here and your comments. If you're new to GoToWebinar format, this is how you do it. And click on the send button. I'll get that. This should collapse on you during the webcast, and you click on the orange arrow here to open it up. And again, if you lose sound, or visual, I should say, then please do just log out and log back in. And again, our quick risk disclaimer here is very important. You know that there is risk in investing. We've certainly seen that in February and most of March. So we know there's risk in investing, and VectorVest is here to provide guidance, but everything you will see in here is provided for educational purposes only. We are not fund advisors, and you should never, what we provide today should never be considered as investment advice. We just don't know your personal financial situations and investment goals. Purpose of our monthly forums: we want to further your knowledge of the VectorVest system, share current ideas and strategies for making money and protecting wealth, and create opportunities to interact and share ideas with other members of our VectorVest community. I did want to let you know VectorVest continues to do a great job of posting a lot of educational webinars free on our YouTube channel. This is the channel. You can just go to VectorVest YouTube channel, Google that in, and it'll come up. What you need to know is you need to click on the videos tab to get a lot of the current videos. And you can see I've been doing some. I did one on great graphs here recently, the VectorVest graphs, and did another one on the dividend aristocrats. And David did an excellent report on gold, plus really the overall market, which he does every Friday. And of course, Glenn Tompkins is a frequent presenter. So do tune in, and when you like a video, give us a like and subscribe to our channel. It'll help grow our video presence on the internet. We always appreciate it. A lot more comments and maybe questions coming in. Hopefully Don can. Oh, he says can hearing now. Oh, hearing zip. He says. Oh my gosh. Okay. Well, no worries. We will communicate by chat. That's all I can do for Don, unfortunately. Hopefully it comes back while we're going, but the good news is we can hear and see his presentations. So Sharon says it always works. Oh, he says he got sound now. Okay, we pushed the magic button. That's awesome. Yeah, Manisha, thank you for that. Always good to get some ideas for what you would like. Looking for tips on understanding market trends, and I've done a couple of webinars on that, and of course that's what we're going to do today, Manisha. Yeah, he's all good. Now he says he hopes we still have the mic. I'm sure you do. I want to mention again, our Financial Freedom Summit is a very popular event, and it's free. And so just really encourage you to register and sign up. And of course, once the summit is on, you can take in any of the presentations that might hold special interest for you. Paul is going to be doing introduction to swing trading. I'm on the swing trading track as well for this one, and I'll be doing a presentation on moving averages. And we have Gorilla Futures, Jerry. We've got a lot of great presentations coming up. A lot of folks really liked Russell Markham's video presentation to the International Forum a couple of times ago, and he's going to be presenting a couple of very interesting topics as well. And then we have option trading, and then the retirement section. So a lot of great stuff. So I hope you'll click on the register button. I will. It's just VectorVest.com/summit, and I will chat it in to your chat box when David is speaking. Okay. Alan says registered. Awesome. Also want to let you know VectorVest has partnered with Shopper Approve to receive feedback and maybe guidance from randomly selected subscribers. So it looks a little innocuous, but if you get it and it says Shopper Approved on behalf of VectorVest, we have partnered with them, and an email will go out apparently to just sort of a random selection of subscribers. So you may get that and may wonder about it, and it certainly is something we hope you'll participate in and help us with your feedback. Yeah, Douglas, we do record the summit recordings, and then as a basket, they become available. There is a fee afterward to recover the costs of putting the recordings together and all of that. I think it was $95 US dollars last time for the entire um, selection of recordings. So it definitely will be available. Obviously, it's great if you can attend live and ask your questions, but that will be available by recording as well. All right, so our agenda, we're going to do the 15-minute market forecast, myself and Dr. David Paul. David will cover the US and UK markets, and I'll do the color guard report and a little focus on Canada. But when I looked at the color guard report, some markets have not moved to a confirmed down, but they're struggling nonetheless. And I think we've seen that since about mid-August. It's been really tough to make money. If everyone or anyone, well, maybe all of you can kind of let me know with either a Y, a yes, you've struggled in the market since August, or an N for no, if you've had no problems and you've continued to make money. That would be fantastic. I'm seeing lots of yeses coming in so far. Looks like the yeses have it. If you put 4 or 5 exclamation marks, then we know you've really struggled. Yeah, Peter says lost money. And Richard says went to cash. Getting some useful ideas as well. Just buy some lottery tickets in September and October. Oh, and John says best month for call credit spreads in August, so that's awesome. Yeah, most people struggle, but Billy says no, and 4 or 5 exclamation marks beside that. So that's awesome. Uh, yeah. And Chris says made about 10%. So that's pretty good, because it was a tough time in the market, I think, and I'll show you that in what I'm going to show you coming forward. And then again, very looking forward to Don Wellwood's presentation on his model portfolios, both Canada and the U.S. Some very practical guidance coming from Don. Really looking forward to it. Well, listen, here is the color guard reports, and I think it's always so valuable to have a look at all the global markets combined to see if we're all in sync, or is there any market that's really showing a divergence for us. And I have the benefit, at least for these forum presentations, of being able to log into all of the countries that are available in VectorVest. You have your own subscriptions, of course, to the countries that you trade in, but I have the benefit of them all here. Yeah, and David says if you are looking for a great return on investment, spend the $95 and buy the 3-day financial summit if you cannot attend the live event. I think it's just so valuable to have the recordings, the ability to make notes and pause the recording and so on. So I certainly support that. It's a great investment. So in Canada, you can see we're still down on the year. We improved a little bit from the September forum, but we're still down on the year. And it's remarkable, isn't it? Because I've talked to so many subscribers who are up, 15, 20, 30, even 40%. And it all kind of came on that wonderful DEW up signal April 6th, or if you were a little more aggressive, the primary wave and the green light buyer, which came almost within a day or two of the bottoming of the market on March 23rd. The bottom fishing strategies, even if you were buying good quality retirement dividend paying stocks, those stocks went up so dramatically. And so what I've said to my Q&A investors now for a few weeks is job number one now is to protect the gains that we've made until we see another clear signal. And we got pretty close to another bottom in terms of the buy-sell ratio in Canada. You can see we got down to 0.18, which historically is a bottoming level, and we have moved up from there. So there is hope on the horizon, but we're currently in a confirmed down still. The DEW is down, and VectorVest is advocating caution. On the US side, and David will cover this in more detail, but you can see still in a confirmed down, the DEW still down. More yellow lights, starting to show in the color guard, which is good. The MTI had certainly fallen and now is starting to pull up again. In Australia, down 4.62 on the year to date, and that is an improvement from where we were last month, but still a lot of red in the color guard and a star in the price column on Friday. But we never lost the confirmed up call, which is interesting, but certainly a lot of primary wave down. So just have to be careful on that. Yeah, Gary, on the bottom fishing, if you look at the bottom fishing strategies in your program, you will see the two most popular sorts with all of the bottom fishing strategies. And they've all involve having a very low RT, the beaten down RT. The star means there is momentum behind the move, shown by the RT kicker combo. So the kicker combo is showing strength to the downside, and that's why we get the star. UK down minus 8.3 on the year, and never lost the recent confirmed up, but a lot of yellow and a mix of green and red, and the MTI still below 1. So the long-term trend is down, but there has been some move to the upside with the primary wave. Singapore just continues to struggle, pretty much flat from last month, and you can see mostly yellow for caution, a little bit of red, and the confirmed down call is holding. But the last 2 days, primary wave up. So, seventh secret to making money, according to Dr. Toledo in VectorVest, is be an optimist. And hopefully this is the turnaround. When things get beaten down the most, that's when they often turn around and explode up. And on Europe, down 7.4% on the year. A little bit of yellow showing up now. Again, never lost the confirmed up call, but the caution light has been on most of the time. We have a primary wave up the last few days, which is encouraging. The buy-sell ratio, though, having trouble really advancing too strongly. And there's Hong Kong down 0.89%. And we can see the red in the color guard and now the recent yellow, but primary wave is still down even though we're in a confirmed up call, and the long-term trend is down as well. So quite a lot of caution when you look at the overall. There's just an awful lot of caution, and a lot of that equates to uncertainty, a lot of uncertainty in the market, and so caution light is on for sure. In terms of the top performing global markets, I mean, it's really hard to find a global market that has really been performing well. We see the triple leveraged TQQQ on the NASDAQ, even with some pretty rough days this week, is still up on the year to date 45%, and the regular non-leveraged QQQ up 29%. So from there it gets kind of tough. Asia doing a little bit better, and then again just in the last 15 days, just not a lot of movement one way or the other, but the NASDAQ managed to pull out a gain on that. Yeah, Tom says Hong Kong is surprising with its turmoil, and Edgar says it's worth looking at the Indian market as well with everything that's going on for sure, and I would agree with that. And then I did mention in the email I sent out this week to everyone reminding you of the webinar, and I hope you don't get too flooded with the emails about about the forum, but I really didn't want you to miss the forum today. And um, I would just mention the coronavirus watch lists that we have both in Canada and the US. We have special watch lists. In Canada, it's under the special watch list folder, and also in the US as well. So we've had some really strong performances in Canada. Um, well, Health Technologies has certainly been the leader, and I've got a graph on that. And then on the U.S. side, we've also got some pretty well very strong stocks, and everybody's keeping an eye on mRNA. Regeneron is another one. It didn't make the list here, but it's another one, um, you know, in the news and one to watch. So these are stocks to watch, and when they get a buy rating or they start to move up like this, and you see the news being very positive. Um, this is on a weekly graph, and you can see the entry point here just under $2 above when it pulled above the 30-day weighted moving average. RT pulled above 1. The DPO pulled above the 0 line, and even the MACD turned positive shortly after. That was a pretty good graph setup and a pretty good entry signal coming out of a long channel, and it went from $2 to about 7, and now the price target is up at $9, which is still another pretty good move. Terry, I just Google. Terry's wondering, how do I get the news? And I just Google. Um, so here's NL or NV, ENV. Oh my goodness me. Let me start again. ENLLV. And you can see it's up 124%, and all of that has come just in the last 3 days, breaking out of a channel. This is a daily graph, and you can just see the volume increase, which would have been a good signal to take a look at that. And it's certainly moving up nicely up the page. And one strategy, and this is kind of what I've been doing, because we don't know who's going to end up being the winner or the leader in the vaccine race or the race for new technologies that will help with COVID-19. So I've just been stepping in with very small positions in 2 or 3 stocks, US and Canada, and that's been paying off. I'm not going to be a big winner, but if something, if there is a new technology, I've got a chance. Yeah, and Michael from Ottawa says, I bought SONA at $2 and it's almost at 9. So I think that's the way to go for sure. Great, thank you. Few people chatted in. My emails are just fine. Yeah, and I'm just looking at the YouTube channel, and Robert says pretty much in cash, and Susan says, "Wow." Oh, she's talking about the weather being gloomy. It wasn't just the color guard; it was the weather that's a bit gloomy out her way as well. So, all right. So listen, I hope this is helpful to you, and I did just want to mention my Friday essay again for I write it for the Canadian subscribers, and then I do show them here, and every 2 weeks or so I'll do a video to sort of support the essay. I didn't do one with the portfolio manager, but the portfolio manager has won the Stocks and Commodities magazine Reader's Choice Award for 3 consecutive years, 2017 to 2019. So I'm just suggesting if you're not using it, you should be, and I've given you 5 of my favorite things. There's a lot more that I like about it, but there's 5 favorite things that I like in the portfolio manager. So I did want to mention that. And there is a 30-day trial available. You'd have to call support and get the 30-day trial, and they'll give you $100 off if you decide to continue. If you're not using the auto timer, with the portfolio manager. That gives you the complete picture. It's not absolutely necessary, but it's a helpful thing. Richard says the essays are always exceptional, so that's great. Appreciate that. And the managing directors are doing them as well, and I've been reading them, and they're all outstanding. So our market timing graph in Canada, we've flattened out again since about mid-August here. It's been tough. So those of you that chatted in, yes, it's been tough to make money. I think this graph explains exactly why. The MTI stayed up quite at a high level for Canada, especially at 1.5. We were up there for weeks and months, and after the March bottom, and so we had a chance to make good money. And what we have to do now is protect that money because there will be another bottom, and that's when we want to be ready for that. But the economic climate, the market climate, still not looking good. Canada or any of our countries, the VectorVest earnings for our TSX composite still really weak. On the coronavirus watch list, if you have a suggestion either in Canada or the US, you can email me in Canada or email Glenn Tompkins on the US side. He just picked some of the ones that were really starting to show their potential, so they may not have them all. And I just quickly wanted to show again the TSX composite, and it's been challenging. And when you look here, we're in this narrow trading channel. If you look at this line and this line, we're in a very narrow channel here. A little bit wider channel if you go to the high, but nonetheless we're in a narrow channel and we've got resistance coming up. So next week could come up a little bit early on, Monday and Tuesday, and then we're going to find this resistance area, and then of course the moving average. So we need to be a little bit cautious again next week. But we could have a day or two of good opportunity to make money. So I like to show the emotional market cycle and kind of where we're at, both Canada and the US. And typically in Canada, we kind of tend to top out at about 1.3. Now we did get up to 1.5 and stayed there a long time this time. And a lot of that was due to the stimulus money coming in from our government in Canada and our government in the US. But nonetheless, we trade what we see, not what we think should be happening. And we did get close to this blast off phase again, especially with the buy-sell ratio, more so than the MTI. So there's two ways to look at this graph. You can look at it over here on the left and say, well, gosh, we're below 1 in the MTI. We're into this near the blast off phase. It might be a good time to start stepping back into some positions, at least on the up days. Or you could be over here and you've come through all this mess of anxiety and panic and despair, and now we're down at this low level, and this is where a lot of investors without a service like VectorVest, this is where they throw in the towel and sort of capsulize their or capture their losses, and this is where you want to be careful. You still don't want to hang on to a position that has met your stop criteria, but you can't just go selling willy-nilly at this stage of the game because we're getting near this market bottom again where we're actually at the blast-off phase. So you can see buy-sell ratio 0.33, US 0.53. All right, any last questions? Rob says where to get those TSX earnings and the TSX earnings graphs. So, Rob, both Canada and the US, this is for everybody. If you go to the graphs tab and the market climate graph over here at the top left, here you've got all the table information that you have in the views. You can plot on a graph, and I've just got the actual TSX earnings in the top. And then VectorVest normalizes the earnings with a moving average, and that's what we see in the subgraph. Lawrence, the MTI is what I was showing on the emotional market cycle. but the buy-sell ratio is the canary in the coal mine. So we always want to keep an eye on the buy-sell ratio as well. All right. I want to hear from Dr. Paul, and so I'm going to bring him into our program here. Just kind of gotta do some juggling over here on my far right screen. Sorry about that. And I will look at the comments on YouTube while Dr. Paul is speaking, so I'll answer some questions over there as well. Hopefully we've answered a lot of your questions. So David, I'm making you a presenter, and I believe you will have to accept that responsibility. And then you're away to the races. And thank you so much for giving us your time today. I know how busy you are, and so this is absolutely appreciated.
Thanks, Stan. Can you see my screen there okay?
Yes, you're on here. Let me see. Are you on? Don't see it on. For some reason, I do not. Oh, there we go. We're now on YouTube as well. So we're all good. Thank you again, David.
Thanks, Stan. It's a great pleasure to be here. Thanks for having me. Good afternoon, everyone. It's good afternoon here. I suppose it's morning for quite a few of you. 4:30 here in West London, a fairly dreary day. I'm going to do a quick review of markets, UK and US, plus a little bit of gold. I have to start by just saying that VectorVest is pretty much the only organization in the UK that's authorized by the regulator, and that means that although I'm qualified to give investment advice, folks, I can't do so without sitting down in front of you and doing a long and a very detailed fact find. I'm allowed to talk about those shares that I hold myself, but I have to make it very clear that although those shares are suitable for me, they may not be suitable for you. So that said, we can move on to something much more interesting. So I think Stan has gone through this a little bit. That's the front page of VectorVest in the US. And I don't think I need to talk about the news, the major news story that erupted yesterday. I'll leave that to your weekend newspapers. But certainly it caused a great deal of volatility in the market yesterday, and I would expect that volatility will be maintained between now and the election. So we have a confirmed down in the US, and the short-term trend is still up. The underlying trend is down. As we'll see in a second, the DEW is down and the confirmed call is down. So let's go straight away into the market timing graph. And that's what I see, folks. So these are confirmed calls, and that confirmed call, you can just about see it on the chart, occurred on in the course of May, quite late, and that was the confirmed down. I think that occurred on the 11th of September. So the longest term measure of the trend in the US is down. The MTI and the buy-sell ratio are in mega overbought, and they got down to about 0.25 on the buy-sell ratio a couple of days ago. Similarly, the MTI got down to about 0.65 a couple of days ago, and that's precipitated this bounce that we've had over the last few days. If we look at this in a little bit more detail, I'm reasonably optimistic here, because those of you that have followed anything that I've done over the while is that we can see that the price of the VectorVest composite has risen, but we can see that the MTI has in fact made a falling bottom. Now that is a type of a divergence known as reverse divergence, and it invariably predicts a continuation of the trend. So technically alone, without worrying about news or what happens in the election, that's predicting quite a positive situation. So I'm reasonably optimistic about that. That's the DEW. That's the DPO, and this is the 30-day weighted moving average. And when the market closes below the moving average and the DPO is below its center line, which is 0, then we get a sell signal, and that sell signal is still in place. Now, interestingly, on Thursday, we closed above the moving average, but the DPO couldn't get its head above 0, so we are still in a down, but getting close to a change in direction here. So the big hitters of the market timing world, the DEW and the confirmed calls in the US, are down. Now, I have taken a couple of positions based on the primary wave, which turned up 3 days ago. But those of you that have watched those videos that I try and do my best to put out during the week, that they send out on Facebook, etc., I mentioned that trading on the primary wave alone against the direction of the confirmed call and the DEW is not for those people of a nervous disposition, okay? Because this can quite easily be a bull trap. I don't think it is, but it can be. As you can see, on this June low, ladies and gentlemen, when the market did its best to move up after the June low, it pulled back before going again. And that's, I think, what's happening at the moment. So even under the most optimistic situation, we could have 2 or 3 days pain before it moves again. And that's the S&P 500. Now, I don't know if Carwin from Wales is watching, but Carwin calls me the Mr. 78% man, because invariably a pullback will get back to a 78% retracement. It could get, if I can get my pen, it could come to 62, which is there. But invariably, this market will pull back to one of these levels before going again. It did it in June. It actually did it at the March low, exactly the same thing. So what we're seeing at the moment, yesterday's weekday, even although there was news, technicians always believe that when the market needs to do something, that the news will pop out. And it certainly popped out in great style yesterday. So we could see a pullback here. I'm very optimistic. I think if we see this market breaking up through 3.4, the level here is 3.405. That's what the market makers are looking at. So I would expect this market to pull back for a few days and then go again. We shall see. We shall see. I've taken a few positions based on the primary wave. I like this because there's what old technicians used to refer to as an island reversal. There was a gap there and there was a gap here, and that's the island left in between, and that's always good. This was a 62% retracement of the last range. Is this a bull trap, or is it the first stage of recovery? We don't know. And I suggest those of you that are not in the market to wait for at least the DEW to give you a buy signal, that medium-term market timing system. I'm a simple-minded fellow when it comes to Unisearches. In the UK, we have a Unisearch guru, a young man called Mark. I don't know if you're listening, Mark, but I keep my Unisearch very simple indeed, and this is one that I spoke about at the last swing trading course. I call it the DEW swingers, and largely it uses the DEW for market timing, and it's got a very simple system that looks for shares that have got a reasonable comfort index above 1.2, and we sort those by a mixture of CI, the long-term trend, times growth rate, and that brings those shares with the best combination of trend and earnings growth rate to the top of the pile. As you can see, there's no relative safety in there at all. So it's looking for growth stocks, and those stocks need to be managed very proactively. The DEW turned up, as Stan said earlier, on the 6th of April, and that's what the darn things have done, folks, since April. And as Stan so beautifully says a few moments ago, I'll be damned if I'm giving that back. Okay, so just be very careful with stops at the moment. We're moving into a very sensitive area of the year, seasonality-wise. our big hitter market timing systems are down. So I think that you need to be on the defensive. Nevertheless, this little search has worked exceptionally well. I didn't get them all, but I got a few of them. It's been a very, very good time, and I've reported on those every Monday afternoon to anybody who'll listen to me. I'm in AMD at the moment. I couldn't resist AMD. I got traded this earlier, but when I saw it coming down, taking out these lows, and then running the stop losses underneath this lows, and then the primary wave went up here, and I bought into it. I'm still holding it. It probably needs to come back to kiss that high now. If the general market moves back, and I shall do my best to manage that very proactively. Also bought a bit of Target. I couldn't resist. Those of you technicians should see the beautiful cup and handle. That was the very first pattern I traded, Stan, many years ago. I used two moving averages for the trend, 21 and 55. The 21's above the 55, all is good. But I rarely put them on the chart because I've been looking at the damn things for 40 years and I know exactly where they are. But I like this earnings per share moving up here on target. The gap is good and all is good so far. Who knows what's going to happen next in this environment? All we can do is have a little methodology and do our best to focus on the process. Now, gravity lived up to its name on Thursday because gravity, in fact, pulled it back. Now, Stan, if you remember, I was on here, not the last time, the time before that, and I spoke about my exit criteria. And a lot of people still struggle with this, but I bought gravity on that breakout just there. And I put a stop loss at the 2-day low, which was just here. And when the share had made as much as I'd risked, that little bit, I took off half, brought the stop to entry, and then on Thursday, I got stopped out of that half. So I made some money on half. And if I had not employed that strategy that you wrote about, I would have in fact incurred a loss. So that is, and those of you that would like a copy of that, Stan, am I correct in saying you wrote about that in the essay, your essay some months ago? That's gravity. Now the UK, folks, is the underlying trend is down. The short-term trend is up, hanging in there, as my grandmother used to say, by the skin on its teeth. As you can see, the pointer is in the red, and VectorVest does not advocate buying stocks at this time. Darn good advice. Many people say, how can the underlying trend be down and the confirmed call still be up? Well, the confirmed call is engineered to actually ignore a great deal of the noise, and it does a darn good job in doing that, because the market must move down for 2 5-day periods in a row, and the underlying trend must be down before we get a confirmed down. And the reason that we haven't seen a red confirmed down there is that this underlying trend, the market has not been moving down for 2 5-day periods in a row. So it does its best to really ignore a great deal of the noise. And that's the confirmed call. That happened on the 24th of April. And market is rising, and it's done absolutely bugger all in the last couple of months here. But we're still hanging in there. Again, I see this reverse divergence signal, which encourages me, all right, encourages me. I shall live and die by the VectorVest market timing signals, but that encourages me, and it gives me the strength to hang on. Buy-sell ratio didn't get quite as low as in the US, but it dipped well below zero, and the buy-sell ratio still below zero at 0.97. So the confirmed call is still up in the UK. The DEW is down. Now, the DEW, folks, gives wonderful signals after a sell-off. When you get a real marked sell-off like this, the first signal after the sell-off from the DEW produces a great signal. As you can see, it's got whipped here, and anything with moving averages in it, when the market goes sideways, would drive you to drink. And as you can see, sell, buy, sell, buy, sell, buy. And great in hindsight, but to do it is something else. So the confirmed, the DEW is down at the moment, and the DEW is just going nowhere around its center line, and it's going to keep doing that until the market breaks one way or the other. The DEW is down, the confirmed up is still in place, and I'm still holding positions. Now, in the UK, we've got two main watch lists that I present. Again, simple-minded, and that's our worry-free Unisearch, and it's sorted by RS, and it's looking for shares with a RV of greater than 1.25, above 50 pence, reasonable volume, not on a sell. And that's what it's done. It's outperformed the markets, up 20% since the lows. Very happy with that. I have a similar DEW swingers search, which is pretty much the same thing, except for liquidity, I only apply to the FTSE 350, the top 350 shares by market cap. And since the DEW signal to the other night, it's up 46%. So that little Unisearch is working well. So personally, I have got about 60% of my loot in worry-free type shares, maybe a bit more, and the other 35% or so I'm doing some swing trading, but that's asset allocation. It's good for me. You need to sit down and speak to your financial advisor to see what's suitable for you. Okay, I definitely cannot talk about asset allocation. So I'm very happy with that indeed. My own portfolio, we've had a great run in Games Workshop, JD Sports, Avon has been superb. I got a bit of a smack in a gold stock the other day called Polymetal, another 1% gone, but what can you do? Most of these stocks are worry-free type stocks, apart from Sylvania Platinum, which has got a lower RS. It would not be a worry-free type stock, so that's my one little swing trading punt, and it's sitting treading water. Nobody seems interested in it. What can you do? Folks, this is Lion Trust Asset Management, and it's just a great example of a spring setup. And the UK people, their eyes are glassing over now, Stan, because they say not a spring again. But that spring has kept me fed and watered for the better part of 40 years. So this market came down, took out the low, and away it went again. There was a deal here, and the guys hunted for liquidity. The liquidity was underneath that low, and that's a pattern that's 100 years old, made famous by Richard Wyckoff. So Lion Trust has been great. Gold. That's the bullion price, folks. And the bullion price, the reason I got that smack in Polymetal is I was hoping this little triangle was going to hold, and it didn't. Okay. Gold is not for the faint-hearted. I have a little model in commodities which looks at a 8-day stochastic and a 40-day stochastic. And when the 8 is the daily view, and the 40 is the weekly view. So it's just a longer version. So when the two are together, that produces invariably a really good buying opportunity in gold. That would seem to be setting up at the moment. Wouldn't be at all surprised, folks, that if the stock market pulls back, which I think it will, at least for a couple of days, that we get a double bottom here before this goes. Silver is lagging. That's rarely a good sign. Now, when I speak anything negative about gold or silver, we have got our gold bulls jump up and down. So Adrian, Andrew in Belfast, and Charlie up in Lincolnshire, please excuse me, but I think there's probably a little bit of pain there for you before this gets going. It's not going to go on until silver comes to the party. GDX, I have a position long in the GDX. Came back, clipped that old top, and then we had a very positive candle pattern in here. It's called a gap and snap, gap down and reversed. I think the candle pattern for that is called a piercing line, but on the floor in Chicago it was called a gap and snap forever. So that looks good. Polymetal hanging in there at that 62% retracement. No volume coming into it yet, so I'll wait for a nice big volume day before getting back into it. I get stopped out of it just there. Thank God for stop losses. Now, energy, folks, is on its knees, but Hendrik from South Africa sent me this morning. That's the XLE S&P Energy, and I think that oil crude has probably got a little bit more, but not that much. And as you can see, some smart money has bought this. So energy, I bought a few shells and they're underwater. And that's a position I should be adding to. I think that there's a bit more pain to go on oil, so leave it for the moment. But sooner or later, that oil market will explode on the upside. I'm 100% sure of. Those of you in the UK, I'll see you all Monday afternoon, 1:30 for a regular Q&A session. Stan, that's me, sir. Any questions?
Gosh, wonderful overview again, David, and love your charting. So love that spring. We don't get tired of hearing about it and watching it and seeing it, so that we learn to use it. Very, very
Yeah,
good.
it takes a bit of what I call testicular fortitude to buy in, because you're buying when everybody else is running away. So although it's quite easy to see in hindsight, it's a lot more difficult to do in practice. And that's why it probably works. The good trade is always the hard trade. Not intellectually tough, but emotionally tough. And that's takes a bit of practice. Once you get it right and you see the thing flying your way after you get in, then it takes the pain out of it. But the first couple can be difficult.
Just two questions before we move on to our keynote speaker, Dawn. Um, the question was about your sort, and I believe your favorite sort, your general sort in most market conditions, is the CI times GRT. So I've been chatting that in. I hope I'm right about that. But
That's correct.
maybe you can.
That's for
correct.
swing
Okay,
trade.
good.
That's for swing trading, and
Yeah.
I don't know what it's like in Canada, Stan, but in the UK, CI times GRT doesn't exist. So you've got to go to the applications field builder and build it. It takes 30 seconds to build it, but
Yeah.
in VectorVest US, it's a standard. But in VectorVest UK, it isn't. I don't know what it's like in VectorVest
It's the
Canada.
same in Canada, and we just advise people to go in and create it, and we show them how in
Yeah.
our Tuesday Q&A.
Okay.
And
All right.
I've really started using it, and I like it quite a lot as well. It works very well in Canada, just as it does in the UK. The other question in the US DEW swingers, can you explain why you use the symbol ascending? That's a question from Jake. I have to admit I was typing and I didn't hear the overview.
Well, maybe I got that. It's CI times GRT, descending.
Descending, Jake. Yeah,
Yeah.
that's okay.
Yeah.
Well, listen,
Okay.
there's a lot there and it's great. And the question I had, I know people will want to kind of review some of the stocks that you analyzed and do their own analysis. And so the question came up, will there be a recording? And yes, if you're here with GoToWebinar, you will get the recording. So very happy to pass that along. I get the recording and the slides out typically the next day after everything's been uploaded and so on. And so I'm sure David will send me his slides again and I'll get those out. And also those of you that are on the YouTube channel, if you don't get an email from me this weekend with the slides and recording, then you will need to email me at stan.heller@vectorvest.ca, and then I'll get the recording out to you. So, all right, well, listen, we'll move on, but I'm getting a lot of comments. Excellent as always, Dr. Paul, and we just really appreciate your giving us your time again this Saturday, and great expertise as well. So thank you again.
It's a pleasure, Stan. Absolute pleasure, sir. Have a great day, everyone. Cheers now.
All right. So what I'm going to do is find Mr. Wellwood in our list here, and we'll give him the screen. Just take me a second, everyone. Sorry about that, and just keep chatting in your comments and questions, and it'll be my pleasure to respond to as many as I can, and while we're listening to Don as well. Okay, boy, we have a lot of Dons in the list, and that's why it's taking me a while to find. There we go. Found you, Don. Thank you. And Don, I'm just going to make you the presenter, and you'll have to accept that role, I believe. I think we're looking at your screen right now.
Okay. Can you hear me all right?
Yep, I can hear you just fine, and there's your screen. You will need to put up the PowerPoint, but I think we're all good.
Okay. All righty. Good stuff. Well, hello, everyone. We have an interesting presentation for you this morning.
Don, sorry, just before you begin, I don't see your slides as yet. Sorry, I'm just seeing the general screen, so you need to get your slides onto the main screen somehow.
Okay.
And by the way, Don is coming to us all the way from Rio Dulce. I'm not pronouncing that right, I'm sure, but from Guatemala, and he's been there for a while, and it's fantastic to have you tune in from there. And many of you have commented already and will remember Don from the February 2019 presentation he did for our forum on the Fibonacci basics that was extremely well received. So we're not seeing your screen yet, Don.
Well, that's a mystery. That is a mystery. Show your screen here.
Oh, there we go. Yep, there we go. So right now it's not in presentation mode, but we are seeing your screen.
Okay. All right. Well, I'll flip back to the beginning here.
Yeah, if you click
So
on slide,
if
you click on slideshow at the top, then there you go.
There we go. All right.
It's perfect. And away you go. Thanks again, Don. We really appreciate it.
Good to go. All right, Stan. We've had a few technical issues today between sound and so on. So anyway, we're good to go. Yes, again, hello, everyone. We've got an interesting presentation for you today about our portfolios we run. And this is the screen I use typically as the starter when I'm doing the user group, whether that's a Zoom meeting or whether it's a live meeting. This is the typical disclaimer, which just simply says you're going to see some good ideas, but whether you invest in them or not is your decision and yours alone, and it's up to you. This is the agenda, and I'm going to hustle through this a little quick today. I prepared it for about a 55 to an hour presentation, and I got a little less than that, needless to say. So anyway, this is what we're going to go through. You're going to see all of our portfolios. We do 3 of them. But the last one, or the preferred portfolio, is the one that is really going to be the key. So I want to talk about, first of all, a few market conditions. And again, David Paul's been over these pretty good. So a few things I like to look at in critical times in the market is I like to go to some of the historic blue chip stocks. And typically I head to the U.S. market because it is one of the largest markets in the world. And so I like to look at a group called the Monthly Dividend Payers Overview. Why? Because these are some of the largest U.S. corporations that pay dividends, and they're a pretty good barometer on what the market's doing at any given time. So let's have a look at the list, and to find it, again, we hit the viewers tab here and head over to WatchLists. And as you run down here, you'll find the monthly dividend payers right here. And if I move this over, it really says monthly dividend payers overview. So if we click on that, you come up with this list here. And the key to it is really the bottom line right here, because this is the overall average of the whole list. So again, if we right click on that, it brings up your chart here. Now this is a 6-month chart, and I'm not going to spend a lot of time on it, but one of the big factors I like to look at as a businessman is earnings per share. David touched on this, and I don't know how many of you noticed, but this was pretty well on all of his charts. Earnings per share is what it's all about, because let's face it, folks, if a company isn't making money, they're not going to be around long. And so earnings per share is a pretty important thing. Now, these are a composite of all the companies in the overview group. And you can see here from the April 6th, 8th bottom, again, this is a DEW up here. And you can see we've got some great growth. Now, what scared me was the fact that your earnings per share is going down. And one thing for sure, you know, is this is going to turn, because if the earnings per share is going down, the market can't, you know, the companies are not going to continue up. They got to do a turn, because they're losing money. And of course that happened here, and we had the turn down. Now this has continued down, and this is not a healthy situation for large corporations. They got a lot of overhead, and so this just throws a caution flag on the play. And I'm going to go back and give you a bit of history. Here's this goes back about a 15-year graph, and this goes back to July 2006. Now you can see the market hit its high here, which is back in 2007, and from there on, it has been lower lows and lower highs all the way through. We had a bit of a peak through here, but by and large, now I'm hitting the most the touches that I can hit here. I can go from this line across, and it gives me the same trend, but it's a stronger line when you could pick up a few more touches. And though it popped through here, it couldn't hold. And you can notice the recent one, we came up here and hit the trend line, and it has turned around. Now, again, the bottom line here, you can see how earnings have continued to drop. And though we had a bit of an up here, they're continuing down again now. What you're looking at right here is the 08 crash and the signals behind it. Now, the arrows here, green and red, are DEWs, and it looks like we had an awful lot of them. But remember, we're looking at 15 years here. So when you spread it out, there aren't that many. Anyway, that's sort of an overview, and it gives you a little bit on trend and the relationship to watch for with the earnings per share. Okay. So watching historic happenings is always interesting, because so often history does repeat itself, and I think it's important to just kick back and look at what happened gives us some insight as to what may happen in the future or some trends and so on. Earnings per share, again, as I said, that's the key to any growth of a company. If they're not making earnings, then the company is going to run a parallel or fall through the cracks. It's not going to succeed. And be aware of the divergence, and I'm not going to dwell on that because David Paul covered that, but it's concerning, and it certainly, when you see it, know there's going to be a change, and just keep your stops under control. So this is the presentation of our trading plan, and I've run 3 of them now out of the Coburg area. I started the first one in 2015 on the U.S. market, and you'll see that in a minute. And I just started one on the Canadian market at the beginning of 2019. But I was looking for a plan that was easier than those 2 to manage. And so I sat down at the tail of last year and I did an awful lot of testing. I was looking for creating a portfolio that had lots of opportunity for growth. I mean, growth's what it's all about. If you're in stocks that are consolidating or going sideways, might as well leave your money in the bank. It's going to do the same there for the most part, and you'll get 1.5% or something like that interest-wise, and you got 0 risk. If you've got your money in stocks and they're going sideways, you got an awful lot of risk because you're in the stock, and with no growth, there's no gain. So you got to have growth. I wanted extremely safe stocks. I wasn't prepared to risk folks' money or anything else. I wanted really, really safe stocks. I wanted blue chip stocks. And I wanted a way to find them, which was really easy. Search a watch list or whatever. And when we come up with the group or the list, I want an easy way to choose the 10 stocks I'm looking for. There's a lot of technicals out there that we can look at. Some contradict each other, some support each other. And I like to use the term analysis paralysis. You get too many technicals involved. I want it easy. I'm not looking at this for my needs because I can pick through the chaff, but not everybody has that experience. And newer people, it's just, you want something that is easy. And on top of that, I was looking for, from a management system, I wanted a minimum number of technical indicators. And again, it's all part of that. We're not rocket scientists. We're investors, and keep the technical indicators to a minimum. If I could, I wanted a weekly management system which would allow me to manage these stocks if possible. I wanted to have the stocks protected for market down conditions. And I guess out of the stocks, if I got dividend stocks, that's great, but I wasn't going to focus on dividend stocks. And so, and I got to hand this one a bit to David Paul, because a little over a year ago, he was doing a presentation and he made the comment watch lists and so on for picking stocks, along with, of course, sorts. And I'd always been a one who looked at searches and creating my own, or trying to find one that works or modify one that works. I haven't really done that much with watch lists. My own watch lists, yes, but I never considered looking at a watch list as an area to go to. So David threw the flag out there, and so I started looking at watch lists. And I found the TSX 30 watch list and I fell in love. Now let's talk about the TSX. This is a Toronto Stock Exchange. And yeah, it's Canadian, but you know, you folks in the U.S., you've got the S&P 500, which is a good one to look at. Narrow it down, get to the 100, and start to weed through the better stocks. And as you can see below here, I'm talking U.S., and I know other countries are the same way. We've got our ways of diving into the key stocks and companies that are in watch list. The beauty of the TSX has about 1,500 stocks. And there's a TSX composite, which is a refinement of the TSX, and it's down to about 220 stocks. Still too many stocks. The beauty of the TSX 30 is that it's the 30 active action stocks that are moving around and let's call them movers and shakers of the whole group of the TSX. And I thought, wow, I only want 10, but when I'm picking the 10 out of the best 30, that sounds pretty good to me. And the next thing I did is I looked at RS, and I sorted BST, I sorted CI times RS, I sorted the whole lot, and RS seems to be about the best one to use. Now, listen, I tested the hell out of this. I went back to 2015 and I ran it for the whole year, January to December. I did the same for 16, 17, 18, and 19. Anyway, you could be as simple as picking the top 10 once you sort it by RS. I like to maybe look at the top 15 and do a little cherry picking for the last one or two stocks, but by and large, it's an easy pick to go. I'm using a weekly chart because a lot of folks work and they don't have the ability through every day to get in and check stocks or even every night. So weekly, at the end of the week, you do your thing. I'm using the 2-day, 2 and the 8 exponential moving average. Now, what's an exponential moving average? Well, if you take just a standard moving average, and let's say a 10-day moving average, to the math on that is really simple. You add up the 10-day total and you divide it by 10, and that's your moving average. The other two commonly we talk about are the exponential and the weighted, and they both work on the same principle, and that is there's more emphasis put on the last 2 or 3 days close to where we are today than on the further out timing. So they're just focused a little more on that. The weighted, not so much. The exponential, quite a bit towards the current date that you're working on. Now, remember something. If you're looking at a day chart, your 2 and 5 are 2-day and 5-day. But when you're looking at a weekly chart, that's 2-week and a 5-week moving average. So as you change your chart, as does your values change there. Now I'm using a 10-day trailing stop on all stocks. What's a 10-day trailing stop? Well, if you got a stock worth $10 and you put a sell in, which is a typical stop at $9. When the stock drops to $9, your broker sells it because you enter that stop with him. A trailing stop is similar, except the trailing stop gets dragged along as the stock grows. So it gives the stock an opportunity to run. So if the stock goes up to $15 and even $20, the trailing stop gets dragged along with it. And if the stock, or when the stock starts to turn and pull back a little bit, the trailing stop locks in at that peak. And for example, if the stock got to $20, then the 10% trailing stop is $2. So the stock gets sold at $18. So that's the beauty of a trailing stop. And so when this is really simple to manage, when the 2-week EMA crosses the 5, sell. When the trailing stop hits, you sell. And you know, to find the TSX 30, I mean, again, we come to the viewers tab here. We come down here to the TSX and click on it. And this will open up this chart, and there's your TSX 30 right there. And it's that easy to find. You'll come up with this list of stocks, or whatever list is current. This one happens to be, I set this chart up here on September the 22nd, and this is the way it worked out. Now, of course, I changed my sort here to RS, so you can see the RS down here. And yeah, they go below 1, but they're still sorted by RS. So the top 10 RS stocks are at the top of the list here, and they run down to the bottom. The other interesting one is I do like RS and CI, but you know, the interesting thing is they work out about the same. So I like to stay with this one. I've just had better. I tried all the sorts, guys. I tried all the sorts. I tried VST. I tried RS, CI. I tried RS. I tried RV. And I worked these through all the testing I did, and RS comes out the winner here. It really does. And this is an example of the chart that I use, and it's that simple. So we're setting up here, as you can say, end of week. Your chart probably is set up end of day. And so you click on this and set it up by week. I made the green line here, my 2 a green, and I made the 5 a red, and that's all I've got on this chart. So you know, and when we start, we flip over here. Did a little line huggy there. Nice growth here. We drop below. So the plan is the next day, on the following Monday, you sell, you're out. Down here, it pops up again. The following Monday, it's still up higher. So you hop in. And here we drop below again. And that would be a sell signal, except the following Monday, it opens higher. So you hold. And that seemed to carry on for about 3 weeks here, where it never dropped down to where it was. So you hold because you're higher. And bingo, it pops back up again, and away she goes. This is Ballard Power, which is one of the green energy types, and good one. Now, here's our trading plan. We've got the overview at the top, the purchase criteria, the sell criteria, and the comments. So it's all there for you. Now, here's what the portfolio did. This was bought December 31st at the close, 2019. So we came into the year here and we got ourselves up to about 15% gain. And we had a pullback, and the flat line here is your DEW down. And following that, that's our April 8th, April 6th. I'm not sure what it was in Canada. I think it was the 6th. And away it went. We hit a peak, as I show up here, of $161,000. This is from 100,000 base. So at one point we were up 61% in 8 months. Not bad, not bad. It did pull back here, as you can see, and most of the stocks were taken out with the 10% trail. I think a few of them hung in, but most of them were taken out with the 10% trailing stop. Bottom line is we're up 51.67%, folks, in 9 months, with stocks that have next to no risk, easy to manage, simple portfolio. Wow. I don't know about you. If your portfolio is producing better than that, more power to you, but that's pretty damn good for a 9-month investment. And that we're calling the new Coburg portfolio, or the preferred portfolio. Preferred because it's better stocks. So in summary, what are we saying? We're saying that the TSX 30 group watch list is the best of the best for place for picking these stocks. We're saying that sorting by RS produces the safest and the best stocks out of that group. We're saying that this is a super simple stock management system or chart with just having 2 technicals on there. Incidentally, those 2 technicals have been the result of Bob Turnbull, who we got to give kudos to. I tried the 3 and 8. I tried the 5 and 10. I tried the dailies. I tried the weeklies. I tried regular moving averages. I tried weighted. Bob's done all the back testing on the exponential moving average of the weekly, and had great success with it. And so I borrowed Bob's idea. Bob's done a number of presentations on the forum here, so I'm sure most of you know him. The 10% trailing stop is an excellent one too, and I know Bob uses that also on his the charts and so on that he does, and the portfolios. And replacing stocks are easy because you just run the TSX 30 list, you sort by RS, and you pick the top stock that you don't have to the portfolio. Super simple. And the results speak for themselves. 50% over 50% 9 months. Wow. That's pretty damn good. Now,
Don, I just wanted to let you know that you're getting a lot of positive feedback on your presentation. And I had one question, and you've got about 30 minutes, by the way, so we do go a little bit past our 90-minute time, so don't worry about that. And I just wanted to ask the one question. There's a few questions, but the one I think most people are chatting in is the 10% trailing stop. Is it triggered at just the end of the week, or could it trigger during the week? That seems to be a question people have.
Okay, you enter the trailing stop with your broker, and it just automatically drags along, and it will take the stock out as soon as that stock drops that 10%. Your broker will sell that stock for you. He'll do it automatic. That's your software systems at your brokerage companies. That's all done automatically. That's awesome. That stock comes out anytime during the market open, as soon as it hits the trailing stop.
And you would replace it on the next Friday or Monday if the market is still up.
Yes.
Okay.
Yes.
Awesome. All right. Sorry for that interruption, but I thought I would let you know that we're getting a lot of great comments. So keep her
Okay.
going.
Well, it's a sweetheart portfolio. It's just super easy. It's great stocks. It's hard to beat. It really is hard to beat. And it's just the strength of the stocks and just how good the stocks are. Anyway, the other portfolio, this one I started in January 2019, and so it's been running for I guess a year and 9 months now. And this is a chart of it, and you can see here that we started again with 100,000, and we built our way up here. We had a DEW here hit, and then that cleared, and we climbed up to here, and we did get some pullback here. Now, I don't use the 10% trailing stop with this portfolio. I think if I had, then now keep in mind, we're not holding the same stocks. When I come out of a DEW, I repopulate the portfolio with the best stocks at that time. And so in this case, we had a drop only to have another DEW, and came out of there, populated the portfolio, and we had a drop down here. Now, perhaps there, the 10% might have saved our biscuits a little bit, but anyway, we got down as low as here. We're still $8,000 to the good here, which is better than the interest we get paid at the banks and most other investments. But coming out of the April 6th or 8th DEW up, you can see it just took off here, and this guy hit a high of 193,763. Hell, that's almost a double in a year and 8 months in this case, because that was the beginning of August. And again, if I was using the trailing stop here, we probably wouldn't drop back as low as we have. But regardless, it got sold here on the DEW down. To date, it's up 78.44% in a year and 9 months. Not shabby. Not shabby. There's my date there when we had the DEW down the 6th. I think the U.S. market was the 8th. The Canadian market was the 6th. Not shabby. 178% in a year and 9 months. And here's a bit of a summary. You can see that in 2009, we gained about $12,815. So we were up about 12.8% at the end of 2009. We went into this, or 19 at least. We went into 2020 with 112,815. And this year we have gained $65,222, an increase of 58.1%. That's the amount when it closed. So it's up, as I said. Now, for those of you who may not realize it, this portfolio is up better than the other one. But this is using the Canadian version of a search called Prudent Performers. And they're good stocks. I don't think they're as good as the TSX 30 stocks. So the TSX 30 is a little more diverse. The other thing I can tell you is the TSX 30 is 10 stocks. The preferred portfolio is 10 stocks. The standard portfolio is 5 stocks. So we're running with 5 stocks here in this portfolio. And here's the chart. Now, I guess we got kudos out to Margaret Bell here. Funny enough, Margaret called this her famous four-finger assessment chart. And we're not quite the same. It's funny because I was using pretty well the same chart. Margaret put a name to it, so I thought, yeah, that'll work. Margaret, instead of earnings per share, she uses volume. I happen to like earnings per share, and there's no, hey, whatever turns you on. I like the earnings per share because when I can see this going on here with earnings, I know that company is growing. I know their profits are growing. And I like that because that damn stock is going to launch. And it's going to stay right up there because, hey, success of any business is making more money. And they're making more money. And that's what I like to see. So earnings per share to me are pretty important. I like RT because it's sort of a trendy, what's going on now. MACD, of course, many technicians use. The ADX is more of a delayed kind of, and this is the D plus, D minus. You can see over here under ADX. The ADX proper I'm not using. And that's a different indicator, and there's no time to get into it for now. But if you use the plus minus, and I set the colors up the way I did here, you just right click on this and you can change the colors and whatever. And that's the same with any of them. If I come up here, I'm using the 3 and the 8, 3 green, 8. And again, I'm using the weekly chart here. So again, this is 3 weeks versus 8 weeks. And this happens to be West Dome Gold. Again, we saw the same chart used on the 2 and 5, and it's not a lot of difference, you know. I mean, here we dropped below, but this was above, so you would have hung on. And away you go. You drop down here where my pointer is, and the next week it opens higher, or so you might have held, but this week it dropped. So again, the following week, if you did get out here, you're going to get in probably over here somewhere. If you manage to hang on, it's going to take you out here anyway. So you're going to get back in here. And again, this is another one. Drops down here. The following Monday, you're ready to sell, but it opens higher. So you hold. And that week held. The next week opens even higher, so you hold. And the next week, you're virtually at the line. And again, it's higher than the previous week, so you hold. And away she goes again. Now, David mentioned gold is digging its toe in for another liftoff, and I would concur with that. I think this earnings per share here is saying it all. And if it doesn't happen right now, it's going to happen. There's no risk in this guy at all. Here's your trading plan. As you can see, 5 stocks. And prudent performers is what we use. And I don't think I say this in the trading plan. Interesting. Oh, you do. Here it is here on the third point. Prudent performers. Prudent performers in the U.S., it's the same search I use in the U.S. for the U.S. portfolio. And I sort it by VST plus YSG. Great search. Done well for us. But there's your trading plan, page 1 and 2. And the U.S. portfolio, this portfolio was started January 2015. And I'm excited to say that it actually tripled itself on August the 13th this year. So we've gone from $100,000 start to $400,000. 300% gain in 15, 16, 17, 18, 19, 5.75 months. Not bad, 300%. That works for me. And you can see the chart here, nice and smooth. Now, of course, stretched out over that time frame, you're not seeing the nasty nooks and crannies. There were a few, and again, I don't use a trailing stop with any of these stocks here. If I move on, this is the trading or the analysis chart, and again, it's the same chart as I use with the Canadian portfolio. We're using ADX, we're using MACD, we're using RT, and we're using earnings per share. And here's your trading plan for the U.S. portfolio, pages 1 and 2. And the U.S. was started down here. This is well, you can see it. This is where it ended up right here. We did reach up at this point here, which is around 430,000 by the look of things, and it pulled back to the 404, 405 for the most part. So it's up 305% in that time frame. This is sort of a summary of what the various years did. And at the bottom, you can see 2015, we made 16.5%. That total 116,601 went into 2016. We made $40,916, up 31%. In the year of 2016, went into 2017 with 157,517, paid 70,970 in 17, up 45% that year, for a total of 128.5% gain in total from the beginning. Went into 2018. Made 13.2%. Went into 2019 with 258,735. Didn't have that great a gain last year, but nevertheless, not hard to take. Still 7.4%, and went into this year with 277,922. And had an amazing gain this year with 127,076 as the gain number, a 45.7% gain. Again, not shabby. And this is where we sit at the moment, and we're in cash because we work off the DEWs, and right now we're in a DEW down. So there you go, folks. That's bustled through a little bit, but Stan?
Don, well, I think you did a fantastic job. You a lot of great comments, and people are asking if they can get the trading plans, and of course I mentioned they are in the slides, and I will be sending out the slides along with the recording as early as I can get things updated, the video and so on. So you will have the trading plan. You can plug it into Portfolio Manager as a new trading system. And of course, what I'm seeing in many of the comments is just how fantastic it is to see a trading plan with rules that you can follow, that are clear, and that is really incredibly impressive. And I think, Don, everyone owes you a debt of thanks for your presentation again on that. I did have just a couple of questions, and we've got time to answer. on the Canadian portfolio, you had referred to the monthly dividend, or it was the monthly dividend payers list that you were referring to, and a question people had was, do you prefer the monthlies over the quarterly, or will you go with a quarterly dividend payer as well if it shows up in your TSX 30 list, for example, in Canada, and just why you like the monthly dividend payers so much?
Well, I use the monthly dividend payers as first of all, the overview has all your large U.S. Monthly companies that pay monthly dividends, and they're all big corporations, so they're a great handle on what the market is doing at any given time. That's one of the things I like to use it for is maybe every couple of weeks I glance over at it just to give me a check on what the overview of the market is, and what the large companies are doing and how they're doing. And because it gives you sort of a lead indicator as to what one might expect. Talking about trading plans, you don't have to do one as elaborate as I've done with these, but you got to have a trading plan, folks. You got to have a trading. Listen, I'm one of the worst offenders. If I don't have a trading plan, it might be just point form, da 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 da. But if I don't have I can talk myself out of anything, and I know you can all relate to that. You can see things like, this stock's been pretty good to me. Oh, man, we're all guilty, and I don't care who you are. We're all guilty, and if you got it written down, you read it. And you say, maybe I'm being a bit emotional now. There's the black and white. That's what it says. I was rational when I wrote that. Maybe now I'm a little, not irrational, but perhaps emotional. Sell the damn thing.
So true. So true. Don, another question that people are having is with regard to the dollar weighting, and are you evenly weighting the positions when you're buying? That was a big question a lot of folks had. Yes.
Whatever, as I have a stock get sold or taken out on a trailing stop or whatever I've got, if there's 40,000 left in the tray and I've got to replace two stocks, I would divide that down the center and I would try and fill the two stocks using an equally weighted amount of money. Yes.
Awesome. All right. And all right. Well, listen, you covered a lot of ground and really gave people some really strong guidance, I would say, on the importance of rules, the importance of the earnings per share. I love that you highlighted that so strongly, Don. That's a unique indicator in VectorVest. It's not just the historical earnings, it's also the forward-looking earnings and the ability to put it on a graph. I'm not sure of other services, they may do that as well, but the EPS, the way it's calculated, is Dr. Bartolito, our founder's own personal touch and experience that brings that. So I'm glad that you really emphasize that as well. So, folks.
Stan, I'm gonna tell you something. David Paul, one of his first presentations, made the comment about VectorVest. He said, folks, it's the best program out there, and if there was anything better, I'd be using it. And I smiled because I thought to myself, and so would I, because it is. And there aren't any other programs that integrate a lot of the fundamentals like value and especially RV, which is an even more important indicator than value. Values assessed back by adding up all the money issues and receivables and real estate and so on that a company holds, where RV looks at sales and so on. I mean, dynamite. It's great, and earnings per share is the same. And VectorVest has little tweaks like this, and the searches. Listen, I don't get paid by VectorVest, guys. I really don't. I'm just off the hip. It's the best there is, and if there was anything better, I'd have it. And there's nothing that touches it. So,
well, we really appreciate it, and people
program.
are echoing that in the chat box. And if you go to YouTube, and you're on YouTube now, or you go to watch the replay, which will be available much sooner than I can get it out. It'll be on the YouTube channel. Make sure you press the like button, and let's grow our VectorVest nation here, as Glenn Tompkins calls it, and I think it's a great way to do it. Glenn from Medicine Hat had a comment. Boy, it's moved up the screen on me now, but it was very similar, that presentations like the ones we've heard today, and yours in particular, on trading plans, Don, is why he's a VectorVest member. And I think VectorVest really shines in the education. They've made an emphasis on that the last few years, and especially during this ghastly pandemic, a lot of folks are honing their education and their trading skills and investing plans, and so I just encourage you again to register for the Financial Freedom Summit. And I did forget to put that into the chat box. I'll make sure I do that right now, but it's pretty simple. It's VectorVest.com and /summit. So I'm going to chat that into the chat box so that you can just click on it and make sure that you don't miss out on any of these presentations. And with that, everyone, and I guess I have to finish up here with my email and the phone number to call. If you're not a current VectorVest subscriber and you would like to try it out and put Don's 3 trading plans to work, you can try VectorVest for 30 days, $9.95 US. This is the number to call. There's your international numbers. And again, I will be sending out the slides and the recording. If you're on the YouTube and you didn't get a confirmation email from GoToWebinar so that you would know that you were registered, then please do email me at stan.heller@vectorvest.ca. Otherwise, I have no way to get you the slides. But Don, I'm seeing absolutely fantastic. I see wow. I see love it. Excellent. Thank you. Thanks. And I think the Coburg user group, very fortunate to have Don as their leader and trading right along with these model portfolios. So listen, everyone, please have a great rest of your day. I want to say thanks again to Dr. David Paul and to Don Wellwood. Hope you're staying safe in Guatemala. And to
beautiful weather. I'm looking out at across the lake here from the boat, and we got little sunny intervals going on here at about 30 degrees C. Hard to beat. The boat is still floating, so it's all good. Yep.
Oh, that's awesome. That is awesome. All right. Well, thank you again. And folks, please enjoy the rest of your weekend. And most important is stay healthy and be safe with your investing right now. Follow your rules. Make sure if you've got a sell rating on a stock and it comes time to sell, don't just give it another day or another week, because that's often what leads to the problems. If you
follow that plan.
Follow the plan. Thanks, everyone. Thanks, Don. Thanks, David, and have a great rest of your weekend, everyone. And look for the email. It may be today, but most likely I'll be getting it to you tomorrow. Check your spam folder because sometimes group emails with a blind copy go to spam or junk, and just make sure you get it. And the slides will be attached. All right. So thanks, everyone. Have a great rest of your day.
And thank you from me.
Thank you, Don.
Goodbye.
Bye bye.